Here's a brief video on how preferred returns and equity splits are allocated in Cherrypick Capital Fund number 2. So a little lay of the land of how this spreadsheet is laid out and a little bit of an overview to start. So for starters, LP is limited partners or investors. GP is general partners or the managers. And there's a few explanations of the calculations I'll go through as I'm walking through this spreadsheet, and then we'll follow up with how profits are distributed after the preferred return is paid. So there's 3 different share classes: the standard share class, gold share class, and platinum share class. And you can see the difference of preferred return and LP and GP splits here. Now we've put together an example spreadsheet of 5 investors in this fund. For instance, you have investor 1 who's invested 50,000, investor 2 100K, investor 3 200, investor 4 300, and investor 5 500K. And that allocates into those different share classes based on the minimum investment needed. So from here, every share is worth $1,000. So to get to your number of shares, you have 50,000, you divide it by 1,000, and you get your total number of shares. Now, looking at the share class allocation of total monies raised. So of all those 5 investors, we've raised $1.15 million. So out of that $1.15 million, standard share class is 150K of that, which is 13%. Now, looking at investor 1, you have the ownership in share class. So this would be 50,000 divided by 150,000 ends up with your 33%. You can see that calculation here. Next is LP ownership in the fund. So to get to that, you have your ownership in the share class, your ownership in the total monies raised, so that 13%, which is allocated to that standard share class, and then you multiply that by your LP split, LP-GP split, so 60%. So that ends up getting you an ownership in the total fund of 2.61%. You can see that flow into each of these individual investors, and you can look at the calculations by just clicking on the cell and understanding a little bit more there. This GP ownership in the fund is just to show you how that's split between LP and GP. Again, it's just the same calculations that you just saw in LP ownership, but instead of multiplying by 60% there, you'd multiply by the 40% because that's the profit share breakdown and the split between LP and GP for that specific share class. Now, if you jump into the different share class, it would be this 30%, and ownership in the fund for this investor is that 70% times 40% of that share class allocation, and then the total share class allocation of the overall fund. Now, we pay quarterly preferred return upon distributable cash flow. Quarterly return you can see on the left here for investors 1 through 5 and that breakdown. This is paid first. So preferred return is paid first before general partners take any money from the fund. And from there, once the preferred return is met, then that's when we go into the GP-LP splits that you could see here. So in this example, we have an example of 750,000 based on, let's say we sell a property or a refinance. Basically, there's a big profit event. And so now we have 750K, and you can see the flow here of that 750K between the LP-GP splits between the different investors. So to get to that number, it's quite simple actually. So you have your 750K and you multiply it by your ownership in the fund, and that is your profit split. And then you can see the GP split there, same calculation, year times your GP ownership. And that's the same for all of these. So it's quite simple to calculate your overall profit share when you have that ownership in the fund already calculated. Feel free to reach out with any questions. Always here to help.